Let's talk about the ultimate goal. You already know exactly why financial freedom matters, right? The idea of totally decoupling your time from your paycheck, waking up without stressing over a monthly burn rate, and having the absolute freedom to just live your life on your terms. We definitely don't need to sell you on that dream. Instead of getting bogged down in the why, we're diving straight into the how. We're going to break down the exact mathematical blueprint to actually mechanize that freedom.
Okay, let's dive into this. Today, we're walking through a step-by-step approach to build your financial engine. We'll hit defining financial freedom, building your assets, the compounding engine, controlling your mindset, and finally, creating your system.
But before we get into the pure mechanics of it all, we really need to tackle a massive friction point. Can you actually achieve financial freedom through stocks? Because let's be real, why do so many active investors, people who follow all the macro trends and constantly read earnings reports, still fail to reach that crossover point of lasting freedom? We know the market builds wealth over time, but the success rate for hitting total independence, it's surprisingly low. Well, the answer is yes, you absolutely can, but not how you might think. True wealth isn't an event. It's not about pulling off one single brilliant trade or perfectly timing the market. Actually, scratch that. It's more like a highly calibrated machine. You can achieve total financial autonomy through equities, for sure, but we have to completely ditch the whole overnight wealth myth right off the bat. Getting there is a methodical, unshakable process. It's all about mechanics, not magic. All right, Section 1, Defining Financial Freedom. Let's lock in our exact goal. To build a machine that actually works, we need a hard mathematical target. Financial freedom isn't just some vague, fuzzy state of being rich. It's a precise mathematical crossover point. It's that exact moment when your investments generate enough passive income to totally cover your baseline living expenses. Once you cross that threshold, you flip the script. You no longer have to trade your precious time for cash. Your capital is suddenly sustaining itself. And more importantly, it's sustaining you. Which brings us to Section 2, Building Your Assets, the foundation of this whole thing. Now, what's really interesting here is the massive gap between traditional financial advice and real wealth building. Hoarding cash feels incredibly safe, but it's constantly suffering from inflationary drag. Uninvested money literally loses its purchasing power every single year. But on the flip side, owning assets like equities means you're capturing the actual compounding value of human productivity. You're buying fractional ownership in real revenue-generating businesses. These companies innovate, they adapt, they generate profits, and they create immense value. As an owner, your capital grows right alongside that success. Moving on to Section 3, the compounding engine. This is where the real magic happens. Think of this as the mechanical heart of your system, and it runs on 3 deeply interconnected steps. Step 1, invest consistently. We're talking dollar cost averaging here, which isn't just some beginner tactic. It's how you systematically beat the risk of bad market timing by continuously buying no matter what the market is doing. Step 2 is focusing on the long term, anchoring yourself so you can effortlessly ride out the volatility. And step 3, reinvesting those gains. Using automated dividend reinvestment plans is absolutely non-negotiable. Plowing those payouts back in is what feeds the compounding loop and keeps the engine revving. Now, right here is exactly where the psychological trap catches almost everybody. Our linear human brains just really struggle to wrap our heads around exponential curves. Look at this progression. Mathematically, compounding works, but in year 1 or even year 4, it feels like the engine is completely broken. The growth is agonizingly slow, and man, is it tempting to just throw in the towel. But if you let it run, eventually, over years and decades, it absolutely explodes. Those massive, life-changing gains at the end of the timeline are entirely your reward for extreme patience during those incredibly boring early years. So as your portfolio finally hits critical mass, these income streams become incredibly robust. You're not just relying on one single thing that could break. You're leveraging dividends for immediate, reliable cash flow without ever having to sell off your principal. And at the exact same time, capital gains and passive growth are constantly working behind the scenes, naturally outpacing inflation and steadily pumping up your total net worth. Combined, these interlocking streams form an absolute fortress around your money, completely replacing your active paycheck. Next up, Section 4, Controlling Your Mindset, because human behavior is the hardest part. Look, we literally can't talk about mathematical growth without talking about human behavior. There's this concept called Parkinson's Law of Money, which basically says your expenses will naturally rise to meet your income. Classic lifestyle creep, right? If your investments grow, but you keep inflating your lifestyle right alongside them, your crossover point is just going to keep running further and further away from you. The math simply falls apart unless you aggressively protect that gap between what your system earns and what you actually keep. And this brilliantly illustrates the idea of the behavioral premium. Those huge long-term returns you get from the stock market, they aren't just handed out for free. They're essentially your financial reward for enduring psychological pain. When the market is booming and times are good, your job is to stay disciplined, no irrational exuberance. But when the market tanks and times are bad, your job is to stay entirely consistent and absolutely avoid panic selling. Refusing to mess with your strategy during the crazy times is how you actually capture those historical market averages. Let's just pause and think about Warren Buffett for a second. It's a mathematically proven fact that over 90% of his massive wealth was accumulated after he turned 65. Crazy, right? And that's not because he magically found better stocks in his 60s. It's simply because he gave his consistent strategy the decades it desperately needed to compound. True financial freedom demands the emotional grit to stick to your blueprint month after month, even when the progress is practically invisible. As the saying goes, the people who succeed are the ones who stay consistent, even when progress feels slow. Finally, Section 5, creating your system. Let's pull the whole thing together. So the crucial point here is that this isn't just a random list of steps. It's a massive interconnected flywheel. Your disciplined lifestyle frees up cash flow. That cash flow fuels your consistent investments. Those investments feed directly into the compounding engine, which is then supercharged by your long-term patience and reinvesting all your gains. Every single piece relies completely on the others. The stock market isn't magic. It's just the highly effective tool that lets this amazing flywheel spin. To actually build this machine, you have to fundamentally shift your mindset. You've got to actively tune out all the noise. The get-rich-quick schemes, the latest hot stock tips, the daily media panic, it's all just one giant distraction. You have to stop focusing on the illusion of rapid wealth. Instead, start focusing entirely on building and optimizing your system. Because the second your system becomes self-sustaining, your capital takes over the heavy lifting for you, and permanent autonomy is finally yours. Which leaves us with one final, incredibly important question to chew on as we wrap up this explainer. Are you going to keep trading your precious, finite time for a paycheck, day in and day out? Or are you finally ready to construct the system that does the working for you? The mechanics are all laid out. The tools are right there in front of you. The next step is entirely yours to take.